Welcome to Newspresso. Here is the top story in the past 6 hours. When you think where to tuck your cash, the chatter around the Fed's move feels headline. Every minute a ripple could push your savings. It may move higher or lower. The Fed's policy steers borrowing costs for banks. It determines interest banks can offer you. It applies to loans and your bank savings. The rate sits in a range hovering near 3. 75% are the Fed's range when overheated. When the economy overheats, Fed lifts the range. It tends to cool spending. It also pushes inflation back down. When the mood is sluggish, they cut the range. They loosen the money supply, nudging people to spend and borrow more. The Fed lowered the target range to 3.75% for cents. After its most recent meeting, many analysts buzz. They say another cut could come on December 9-10. Deposit rates likely shift. They move with the federal funds rate. Banks use the Fed's rate as a benchmark. That's because banks use the Fed's rate. They use it as a benchmark for rates. They give customers savings and CD products. So if the Fed cuts the target, you can expect rates to fall. Banks offer CD rates that may decrease. But here's where the timing trick comes in. Locking in a CD now secures your high fixed rate. Even if the Fed cuts the range later, your rate stays put. The best CD rates today hover around 4%. They are higher for terms from 6 months. Some institutions even offer no minimum deposit. So whether you're planning to dip your money out, you can choose a term that fits your time horizon. On the flip side, if you hold off hoping for a future rate change, you run the risk of the rates dropping once the Fed's policy moves. For many savers, the decision is a trade EKY. It is between locking a higher rate now. The next Fed announcement might. It might not deliver a rate cut. The bottom line is that, with the Federal Reserve's upcoming meeting on the horizon, now could very well be the last chance to lock in rates. Secure a CD today and ride out changes. Peace of mind comes from a higher rate, even as market rates wobble. Subscribe Newspresso. Never miss a major global headline.